kind of a pullback rally to start from around these levels.
All right, Dabur, that's come up with its numbers, a PAT growth of 11% as well as a revenue growth of 16.5%. We've got Mr. Sunil Duggal, the CEO of Dabur India, who's joining us right now to take us through his quarterly numbers. Mr. Duggal, thanks very much for being with us on ET Now. First and foremost, to take us through the key financials of this quarter and how has it been for you?
Yeah, the sales have grown by around 16.7%. The EBITDA growth is quite good at almost 19.8 to be precise, and the profit growth is at around 12%. So overall, in the face of some very challenging and difficult environment, I think we've been able to do reasonably well, particularly on the EBITDA front.
Right. So that's pretty much the word on the numbers, the EBITDA at least. Mr. Duggal, I mean, you know, many FMCG companies, do we have him? Okay, I think there's a bit of a glitch, but we'll still, I hope you can hear me, Mr. Duggal. You know, many FMCG companies, including Marico, Godrej, etc., are planning to hike prices on rising input costs. Are you planning to do the same?
I think almost certainly, because we still see a very high cycle of inflation, which is not likely to ebb in a hurry. So fresh price increases have already been undertaken in some toothpastes and other products in the fourth quarter, and are likely to happen going forward, because the inflation cycle is not going to come off, like I said, in a hurry.
Let's talk about specific verticals, Mr. Duggal, and keeping it with the food business vertical, which has grown really substantially this quarter. What has been the key growth driver for this vertical for you?
I think the increasing disposables in the urban area compared to what they were in the past, and the revival of modern trade has contributed tremendously to the growth in the juice business. Also, an overall awareness and heightened responsibility towards better health on the part of mothers towards the children and towards their families has contributed to this very steep trajectory of growth.
The other bit, Mr. Duggal, okay, I think we just lost that line. We'll try and repatch that line of Dabur for you. But it's been a 16% growth in sales, 11% growth in PAT. The stock is not done too badly either. So Darshan, FMCG may not necessarily be the flavor, I mean, as HUL showed last week, but Dabur, 3.5% up in trade today. How do you like it?
Well, fortunately, Dabur's stock has responded well. HUL was also doing well till the results came in. But that problem doesn't appear with Dabur. So the charts of both were looking pretty impressive for upsides. HUL flopped. I hope Dabur stays put. I must point out that Dabur probably needs a significant correction before it becomes an investment buy. But it's one of the better stocks. So if there is any sense of the market going up, Dabur is a speculative buy, yes.
Ashu Madan, the CEO of Railgas Securities, also joins us right now. Ashu, any kind of a strategy that you would probably like to recommend on the index, keeping in mind the volatility that we are seeing and the kind of comebacks that Nifty has been making from those lows?
See, for a comeback, you can play some short-term spurt. But end of the day, I continue to toe the same line which we discussed a couple of weeks back, that once the strength of the market is broken, you may attribute to inflationary reasons or domestic reasons or geopolitical reasons, but against that flows, I mean, you would never get to know that what are the real reasons for these negative flows. So unless they are abated, I don't think so there is any reason, or one should be courageous to buy this market, whether it was 5600 or whether it was 5400. I mean, it is very difficult for somebody to take, in the sense that nobody ever gets convinced that the bull market is over, or this is the bull market correction, but that there could be deep bull market corrections also. So end of the day, for me, the still market, I mean, unless for a short-term trader who wants to probably play on every movement, which is also, the bias is still negative, that any uptake is being hammered again and again, even at 5400 levels also. So that clearly shows that the market has gone weaker, and the stocks are going from stronger hands to weaker hands. So for me, for a retail, my advice is to still stay away, and this is a no trade zone for them, unless, I mean, they would be much in a, I mean, at 5700 we were talking that it will be better that even if they have to buy 5% higher, but not to get into the stocks. And 5400, I mean, stand is vindicated. So in this sense, I would say that not to catch the falling knife and not to be courageous, that, or maybe getting into by following certain technical levels, because all these technical levels gets broken. I mean, look at the consistent negative flows, and with that, all these gap down openings are not being reversed even intraday. I mean, barring 1 or 2 days, and that they're also not sustainable. That clearly shows that there's inherent weakness in the market. So one should still wait and watch and not get lured by just the levels.
Okay, I'll just try and repatch the line of Dabur. Just one final word, Mr. Duggal, while you are with us. You know, one aspect of the numbers this time around was that the consumer care division did not grow as much as analysts had expected. What are the main factors for this?
I think the growth at around 15% for the 9 months is pretty satisfactory. So I'm happy with the results. Now there have been pockets of high growths in, say, health supplements and foods, and a couple of areas of concern like shampoos. But overall, the trajectory at 15% is nothing to complain about under the circumstances.
All right, Mr. Duggal, we leave it at that. Thanks very much for joining us, and hopefully the next few quarters also pan out to be great for Dabur India. The stock's up higher by about 4% in the session. Now the set of numbers then, and Greenply is the numbers that you should probably be pulling up on your screens. A PAT figure of about 7.2 crores versus 14 crores, which is down almost about 50% on a year-on-year basis. The Q3 sales have, however, shown an increase of